Ladies and gentlemen, please welcome our first speaker for the evening, the Head Retail Liabilities and Branch Banking at IDFC First Bank, Chinmay Dhoble, to deliver the special address.
Good evening. It's a pleasure to be here amidst all the dignitaries and entrepreneurs who are present here. My heartfelt compliments to the ET Now team who have built, sustained and grown this property over a period of 12 years. Leaders of Tomorrow, which has an apt tagline, which is powering entrepreneurs to the global stage, I think is a platform which is now a very well established property where entrepreneurs come, they share their ideas, they present the businesses that they have built, and out of these ideas, the best of the best are selected, and some of them, I think, are here. As I understand, the winners present here have gone through a rigorous multi-level selection process. I want to congratulate and compliment all the winners. All of you are an inspiration for every entrepreneur in this country. All of you are the true nation builders of India. Coming to the topic that I am going to talk about, I will quickly give an overview of the MSMEs in India, the needs and the challenges that the sector faces today. While there are challenges, there are also significant tailwinds which are playing out in the economy. And in the end, I will try and cover our bit that we are doing in being part of this journey. What this slide effectively shows, and it's a bit of a busy slide, but what it essentially shows is the contribution of MSME sector in the overall gross value addition or GDP of the country and the share of employment. So if you see the dots, for example, if you see India, the contribution is somewhere here, but in terms of contribution to employment, it's well above 60%. Similarly, if you see across all the economies, MSMEs are a significant contributor in the GDP, but beyond that, they are a very large contributor in employment generation. While in a way, it's a good thing that MSMEs contribute so much to the employment, it also is a kind of a reflection on the productivity and the efficiency of these entities. Because if you see, large corporates typically have a contribution beyond 60-70%, but their share of employment is much lower, which effectively means that in terms of productivity and efficiency, they are significantly 1 or 2 notches above the MSMEs. And I am sure every entity wants to go up the value chain. So while we have 6.7 crore MSMEs in India, you will see most of the concentration is towards the micro entities. And over a period of time, I am sure it's an aspiration of every entrepreneur, of every somebody who runs a micro entity to become a small to medium, and medium to large. And we believe, and the general theme of what I'm trying to present today, is that the biggest unlock in this journey is going to be productivity enhancement and the efficiency buildup which comes along with that. So when we look at needs and challenges, it's more around, so a lot is spoken about the access or limited access to credit in the MSME sector, and it is very, very true. But I think only talking about access to credit is a bit of a narrow view of the issue. There are multiple stages of how an entity grows from micro to small to medium and large. And as this evolution happens, the needs of the entity also keep on changing. Here what I have tried to put is one example, something which is very common in India, which is the textile industry, and how an entity grows from micro to small and medium, and how the needs change. So if you take a simple textile manufacturing unit, and I'm not sure how visible that picture is, But it essentially starts with a bootstrap kind of handloom unit, where largely it's money which is brought in by the people who start the business or friends and families. There is a bit of informal lending. Then, as the business grows, it graduates to power looms. There are some basic unsecured or small secured loans which are there. Then it goes to automated weaving technology, collateral bank loans, then there are insurances, etc. But what is also important is the scale and productivity. So in the initial stages, the scale is much smaller. Most of the employees you will have will be unskilled labor, something which is largely known to the promoter entities. As the businesses grow bigger, the clients also become bigger. So there is a lot of focus on relatively standardized labor, quality standards. For a medium enterprise, of course, there is high-tech machinery. Maybe it becomes an export unit with global standards, with different requirements of different geographies. Another thing which changes very, very significantly as an entity becomes larger is compliances. And I think somewhere most of the entrepreneurs or most of the MSMEs, we don't realize the cost of compliances. So compliances are very basic, like your GST registration, Udyam Aadhar registration, to having employees, to PF. Then if you get into export-import, then the compliances become more and more, I won't say difficult, but the compliance requirements change and evolve. And to manage those compliance requirements, you need a different skill set. Then again, credit largely at the lower end, it is unsecured, credit guarantee schemes. But as it becomes a medium enterprise, then you will need relatively more structured finance in terms of import-export financing, LC, or LC, BG, these kind of guarantees. Similarly, on the deposit side, largely at a micro level, you won't have too much of excess money to park. But even if you do, it's into a basic savings account, current account, fixed deposits. Then you will have some requirement of a current account, again recurring deposits. As a medium enterprise level, you will need some FX solutions, some liquidity management solutions, large-scale investment solutions, and again going back to the manpower requirement. So here you would be basically managing accounts on your own. Somewhere there would be you would have your own chartered accountant or an outsourced CA entity. At a medium level and large level, you require proper CFOs and accounts function, etc. And the point of this slide is that the requirements depend upon the life stage of the entity, and it is important for a financier, or for that matter any advisor, to give the right solution at the right point in time for an entity to grow. This is a slide which all of us are aware. There is a lot of working capital gap in this sector. Of course, the smaller entities have a larger gap. As you become larger, the gap gets bridged. But again, I am saying it's not only about credit or access to finance. It's about multiple areas where diversification is needed. While all this is there, I think there are significant tailwinds which are there for the Indian economy. And while I'm sure a lot of speakers will speak about the opportunities that are there in sector, I think one theme which in a way encapsulates these tailwinds is the Atmanirbhar Bharat program of Government of India. So Atmanirbhar Bharat, I mean colloquially, if you say it's self-reliance, it's not only the old-time self-reliance and reduction of imports, etc. It is largely focused on self-reliance, being efficient, being competitive, being resilient, and growing. So something which is very close to the theme of this property or the theme of these awards, which is empowering towards global competitiveness. And the 5 pillars on which this entire program is built is one is, of course, the economy, which is growing, reducing imports, creating global competitiveness, increasing sectors through which we can export to the world. But what are the levers which make you competitive? And those are the areas where the government of India has really pushed a lot. This is kind of an umbrella program where all the schemes which are largely manufacturing driven, but also services driven, which are brought under one umbrella, which is this Atmanirbhar umbrella. And the example that we are taking is, because this we think is the framework which kind of encapsulates the entire philosophy or the rationale behind growth. So the other one is infrastructure. No point in having ability to manufacture or to export if you don't have the requisite infrastructure. So there is a lot of focus on infrastructure. Then the next part is something which in India all of us should be really, really proud of, and all of us would be interacting with your counterparts in other developed economies. So do we. But the kind of digital infrastructure and the India stack that we have built is, I mean, there is no comparison. There's no even distant second for this kind of stack. Of course, we have a lot of we keep talking about demographic dividend, the number of people who are working age. But at the same time, in India, we also have an issue of employability and skill gap. While our population is increasing, more and more people are reaching the age of the age where they will join the workforce. There is a massive skill gap. We look at skill gap largely at the lower end in terms of vocational skills, etc. However, we need to also see that sectors where we are doing well, like the services sector, the IT sector, that is also a sector where knowledge gap and skill gap becomes very, very important. And a part of this is also covered in this scheme. Last, of course, the PLI scheme. I am not... From what I know, a lot of you are from the manufacturing sector, and either directly or through indirectly, you would be taking advantage of some of these PLI schemes and the sectors where the PLI scheme is being implemented. But we are seeing a lot of investment happening in these sectors. So these are the 5 pillars, I think. These pillars are they capture the tailwinds. I am not saying this is the only way we are going to grow, but this is one of the biggest levers where we are going to grow. So this is a part, since we are from the financial services industry, I would want to talk about for a couple of minutes, which is the digital infrastructure. And this is an example of how the digital infrastructure makes it, one, easy for the lenders to start lending and to give more lending. At the same time, it also includes a large set of both individuals as well as entities, which were not so far covered in the lending spectrum. So on the loan origination and sourcing side, you have multiple platforms like Sahay, the Udyam Mitra, or Trades. Trades is a platform which does bill discounting. I was in one of the meetings organized by RBI last week, and one great thing that they have launched is something called ULI, which is Unified Lending Interface. Again, what they are doing is all the services, platforms, and the products related to lending, they are bringing on one single platform, which can be accessed by all the consumers, whether it is individual or on the enterprise side. And on the other side, you have lenders. It's in a way democratizing the entire lending interface. And today, with the amount of data as well as digitization that is happening in the country, I think it will be much, much easier for both individuals as well as entities to access formal finance. Of course, in terms of credit application and verification today, establishing one of the biggest challenges which we in financial services have always faced is establishing the identity and identity of the entities or the individuals. Now the verification layer, which is whether it is your Aadhaar or account aggregator, KYC, has become much, much more easier. The third important one is underwriting. Finally, underwriting, I mean, we keep saying it's part science, it's part art. A large part of it used to be judgmental. Today, with a lot of formal data as well as alternate data sources, it is much easier for the lenders to underwrite, and it kind of creates the risk matrix fairly well. I mean, depending upon the lender's risk appetite, you can very clearly segment customers and alternate data. Your land records today are digitized. Earlier it was only financials. Now you have banking analysis, you have GST data, you have transaction data, you have payments data, you have collections data, you have your social media footprint. There are multiple data points which today can be very seamlessly accessed by financials to determine the lending. And of course the monitoring and servicing, because lending is a business of not only giving money, it's also a business of collecting money. And with your bureaus getting more and more advanced, as well as lot of ratings available, again for individuals and entities, it's much easier to monitor. So what this entire framework does is that it becomes lending easier, and it also becomes much more inclusive. A lot of entities and individuals which were outside the lending spectrum today get included. Similarly, there are a lot of these schemes. Because of paucity of time, and it's not, of course, it's a large sector, it's an important sector, but traditionally we have been lending significantly in this sector across the segments, right? From joint liability groups to wholesale banking. And this segment has been a great paymaster for the bank. We have always had very good servicing from this sector. So this is a focus area which will continue. About the bank, we are a universal bank. We are built on the pillars of digital, social, and ethical. We really try to keep our customer first in every interaction that we do. And as an example of that, we are the only bank which today doesn't charge any fees on any of our savings bank account services. Similarly, we have more than 40 current account services which are free of charge. We are the first bank who introduced monthly interest credit on savings bank accounts. There are a lot of these things that we do regularly, and this is a part of our, as I said, ethical banking feature. We we offer both deposit solutions as well as lending solutions. Deposit solutions are basic current account, then payment solutions, mobile applications, trade and forex solutions. Similarly, on the lending side, as I said, we offer products across the spectrum. What we believe differentiates us is largely one, as I said in the first slide where I showed the evolution of that textile unit. We understand that different customers have different needs at every stage, at every life stage, and we should be there to fulfill those needs. It's not a one-size-fit-all kind of product. The approach is more customization, understanding, and as I said, with so many data points available, we are a digital-first bank. We have APIs built with most of the platform. We have our own strong analytical tools. With this kind of intelligence, we are able to segment customers better and offer the right solutions. Something again unique for our MSME customers on the deposit side, we have an auto sweep facility on your current account where money above a certain balance, we have an auto sweep which gets swept out into an FD where we pay an interest of up to 7.25%. As I said, we have zero charges on 40 plus current account services, which is kind of unheard of on the current account side. We also have special programs for MSMEs and startups. Our apps are best in class. We have something very unique for startup. We have a lot of we have a lot of startup clients. A significant part of the startup industry banks with us. We have solutions both on the lending as well as on the deposit side. And here again, we try to partner with the startups across the journey. So we have a special program called First Wings, where we have a dedicated team for the startups. We offer right from financial solutions to advisory to mentoring And this is the last thought that I have from my side, that we have to understand MSME not as a monolith, but as a segment which runs across industries and across life stages. We as financiers need to appreciate that, and we need to be in a position to offer services which are required at that point in time, not only financial, but as well as give access to services which are also advisory in nature, which helps the businesses to grow. So that's it from my side. Thank you very much, and congratulations to all the winners. Thank you.